Hey guys, my name is David and welcome back to Simple Finance. In today's video, I'm going to be talking to you guys about stocks. So, for most of us, when we think about stocks, we often picture red and green candlesticks going up and down and random letters with numbers changing within every second, okay? And although that is true and that's how fast the market changes within every second, in today's video, I'm just going to be covering the basic principle of what a stock is. So, the big question, what is a stock? A stock is when you buy a share of a company, and by owning shares of that company, you essentially gain ownership. A lot of stocks differentiate in price. Some stocks could be worth a couple cents, and some stocks could be worth a couple of thousands of dollars. And the reason for that is stocks are valued based on how well they're doing in the market. So, let's say you want to invest into a stock. How do you know what stock to pick? So essentially, the first step of choosing a stock is by doing your research. And the way you want to do this is that you want to look at multiple companies and you want to do in-depth research of the company, and then you're gonna find a company that you believe that is undervalued. And what I mean by the undervalued is that, let's say a company is only worth $10 in the market, but you truly believe that the stock should be valued at $20. And based on that assessment, then you should purchase the stock. Okay. So let's say you did your research and you came across this company and it's valued at $10 and you're ready to invest. And since it's your first investment, you only want to invest about $100. All right. So the stock that you have picked is valued at $10 and you want to invest $100. So therefore, with that $100, you can purchase about 10 shares of that stock. Okay, now you ask the question, how do I make the money? Well, the way you make your money is going to be determined on how well your company is going to be doing in the market. And what I mean by that is, let's say the $10 stock that you have purchased goes up in value by 50%. Okay, that's crazy. But let's just say for the sake of example, it does go up by 50%, and that $10 share is now worth $15. And since your initial investment was $100 and it went up by 50%, the $100 is now going to be valued at $150. But guys, don't think that for every investment that you make, you're going to be making money out of it. In the stock market, it's essentially a gamble. You can win some, you can also lose some. And just a little side note, guys, just going back to what I said, you're not always going to be making money in the stock market. And so it's always important to always invest money that you can only afford to lose. So this is why it's really important for you to do your in-depth research on the company that you are going to be investing in. So in the stock market, there is a golden rule that you're always going to be hearing, and that's called buy low and sell high. So what that means is that you want to buy a stock when it's really undervalued, and then you want to sell it when it reaches its fullest potential. So in the stock market, there's another thing called dividend yield. And so essentially what this means is that the company is going to pay you a small percentage rate for every share that you own of the company. So the rate can fluctuate from either 0.5% all the way to 5%. And so as an example, let's say going back to the $10 share that you have purchased, and let's say that the dividend yield for that stock is 2%, okay? So 2% of $10 is going to be 20 cents. So for every share that you own, you're going to be getting paid 20 cents. So with the 10 shares that you own, you're going to be getting paid a total of $2. And the way you get paid your dividend really depends on the company. Some they pay you every quarterly, so that's 4 times a year. Some semi-annually, so that's twice a year, and some just once a year, which is annually. So you want to buy your first stock? How do you do it? It's very simple. Just visit your nearest local bank branch and just open up a trading account. I know you can do it over the phone as well, but the process of getting accepted might take a bit longer, but it just gives you a bit more option to do so. Before we end this video, there's another thing that I just wanted to say. So one great thing I really like about the stock market is that it allows you to leverage the money that you have. And what I mean by that is that when you invest your money to the stock market, your money is essentially working for you, because if your money is just in the bank account, either in the savings account or checking account, it's essentially a dead money. And I know a lot of you guys might be saying, but David, my savings account gives me 2% annual interest rate. And although that is true, but 2% is not a lot, is essentially just enough to keep up with inflation. So at the end of the day, it's still dead money. Alright guys, that's gonna be it for today's video. I hope you enjoyed this content, and if you did, make sure to give it a thumbs up, as well as subscribe to the channel. And if you have any suggestion on any topics you guys want me to discuss about, just leave it down in the comment downs below, and I'll see you guys next time. Peace!